Wondering how crypto taxes work in the US? What's taxable? Which forms do you need? And how much might you owe? In this updated 2025 guide, I'll show you exactly how to do your US crypto taxes from scratch, what the IRS expects, what changes here, and a simple workflow to get your return filed with confidence. But before we go any further, this video is for general information only and should not be taken as financial, investment, or tax advice. Always do your own research and consider seeking professional guidance before making trades or tax reporting decisions. Hello, I'm Nelly from Koinly. Since our last US guide, the IRS has stepped up enforcement, clarified some gray areas, and there are new reporting rules on the horizon. Let's make this simple. 5 things you need to know first in 2025. Yes, crypto is taxed in the US. You'll generally pay capital gains tax when you dispose of crypto, and income tax when you earn new tokens. Let's talk about rates, the big picture. Short-term gains and most crypto income are taxed at an ordinary income rate of up to 37% under the current brackets. Long-term gains are typically 0, 15, or 20% depending on income. Collectible type NFTs may be 28% for long-term gains. So where do you report? Well, you're gonna need Form 8949 plus Schedule D for capital gains/losses. You have Schedule 1 or Schedule C for income. The key timings to keep in mind is that the US tax year is January 1st to December 31st. Standard filing deadline is April 15th. Extensions and expat timelines apply. Okay, enforcement is real. The IRS has increased crypto enforcement, won data orders against major exchanges, and thousands of investors have received letters. So make sure to keep complete records of everything. Okay, so you might be wondering what's new and notable for 2025. 1099 DA is coming, starting in 2026. Brokers will use Form 1099 DA and expect more standardized reporting and W-9 updates geared to digital assets. Broker question on W-9. The IRS added a digital asset question for brokers to support the 1099 DA regime. There's now a DeFi broker rule. In March 2025, the Senate voted to overturn the controversial DeFi broker rule that would have required many DAXs and DeFi platforms to report user transactions. There's also an update for Form 8300. So as of January 16th, 2024, the IRS says certain digital transactions don't need Form 8300 filing under further guidance. We can also talk about worthless tokens. So the IRS guidance says no deduction just because a token is under $0.01 without an actual disposal. There's also the theft losses memo. So some investment motivated scams may qualify for Section 165C2, the theft loss deductions. Others like romance scams generally don't. There's also the cost basis tracking shift. So from 2025, wallet-based cost tracking becomes mandatory, whereas before universal was previously allowed. You can still use a preferred method under specific ID. Your records must back it up though. Then there's also some state-specific developments. So Missouri approved legislation to remove capital gains tax on crypto at the state level. Okay, so those are some of the big headlines for this year. Let's talk about how crypto is taxed. Capital gains tax happens when you dispose of a capital asset. So this could be selling for USD, it could be crypto to crypto trades, it could be spending crypto on goods or services. Short-term, meaning under 12 months, is usually taxed at ordinary income rates, while long-term, which is over 12 months, can be at 0, 15, or 20%. And of course, keep in mind that collectible NFTs can be up to 28%. We can also talk about income tax when you earn new tokens. So there is income tax when you're mining, staking, airdrops, referrals, learn to earn, watch to earn rewards, DeFi reward tokens, and some interest-like rewards. And later disposal of these tokens also trigger a capital gains tax on the change in value since you received them. Okay, calculating gains, losses, and income. A gain/loss is calculated when you take the proceeds and subtract the cost basis at disposal. Some methods that you can use, we have the FIFO, LIFO, HIFO, or True Spec ID, provided your records identify units you sold. So transfer fees, moving your own crypto is not taxable, but paying network fees in crypto is a small taxable disposal. So for losses, offset gains with no overall limit. If you still have net losses, you can offset up to $3,000 against ordinary income. Let's talk about some common scenarios. So what's taxed and what isn't. So some common events that are taxed include selling your USD, swapping Ethereum for Bitcoin or into stablecoins, spending crypto, earning rewards like mining, staking, airdrops, DeFi reward tokens, many DeFi actions that earn new tokens or trade tokens, NFT disposal, which we talked about, that can possibly be 28% long-term if collectible. Then you have transfer fees paid in crypto. Okay, so what's not taxed? Well, buying crypto with USD, hodling, wallet to wallet transfers you control, gifting crypto, donating to a qualified 501c3 may be deductible if it's over 5,000%. Often needs to be a qualified appraisal though, so keep that in mind. And just some things to keep in mind for gifts and allowances going from 2024 to 2025. The annual gift exclusion was $18,000 in 2024. It's $19,000 in 2025. If you're going over that, you may need Form 709, which has lifetime exemptions that apply. So there's a 0% long-term CG bracket that exists at lower income levels. It does vary by year, so you still must report transactions. So here are some forms you'll use. So for capital gains and losses, you have Form 8949. And then for details of each individual disposal, you have the Schedule D, which includes also your totals. Crypto income goes under Schedule 1 or Schedule C, like we talked about earlier. If you have Schedule 1, it's for miscellaneous. For Schedule C, it's self-employment/crypto business. You can expect the digital asset question on IRS Forms 1040 series and others. Make sure to answer it accurately. Let's talk about deadlines and extensions. The standard deadline is April 15th, expat automatic extension to June 15th. If you have filed an extension, you typically have until October 15th to file, but pay any expected tax by April 15th to avoid penalties/interest. Okay, that's a lot of information. If you need to watch the video more than once, that's okay. Let's talk about the step-by-step how to do your crypto taxes with Koinly. Firstly, you want to sign up for a free Koinly account. In the account settings, you want to make sure that your country and currency is selected to United States/USD. For accounting method, Koinly defaults to FIFO for the US, but you can switch to HIFO or LIFO if you like. So after that, you want to connect everything, link your exchanges, wallets, and chains. Keep in mind that Koinly supports over 1,000 plus integrations. Then basically let Koinly do all the work. Let Koinly crunch the numbers. It computes cost basis per asset, every gain/loss, and income. Staking, mining, airdrops, DeFi are all supported as well. After all the numbers are crunched, you can review your tax summary, which is completely free. You can see what your capital gains, income, costs and expenses, gifts, donations, and losses, and so much more. A lot of information there for you to look over. Once you're happy with that, you can download one of the reports. So you can download Form 8949, the Schedule D, or Koinly's complete crypto tax report. And then you just simply file using TurboTax or TaxAct or any other application that you might use, or you can share directly with your accountant and they can file on your behalf. And here's a massive tip. From 2025 onward, keep especially clean wallet-based records to align with the new tracking requirement. DeFi's, NFTs, DAO, and more. So for DeFi, tax depends on what actually happens. Are you earning new tokens? That's likely going to be an income tax. Are you trading/swapping? That's most likely going to be a capital gains tax. LP tokens at a curve value can push you towards CGT, and protocols differ, so when in doubt, make sure to speak to a crypto savvy accountant. For staking, the IRS says taxable when received, later disposals equal capital gains. Airdrops and hard forks, so income on receipt, so the FMV that day, and then capital gains when you dispose. So for NFTs, disposals are CGT. Collectible type NFTs can be 28% long-term. Creators selling their own NFTs may have income as well. Okay, so for DAOs, there's no specific federal framework. It's often treated like a flow-through income pass to members taxed as income, gains on token sales taxed as capital gains. For mining, it's income on receipt. Later, it's a disposal, which equals CGT. Self-employment miners may owe self-employment tax, so definitely keep that in mind if you are a self-employed miner. Gambling/casinos, there's no clear crypto-specific rules. Assume income on winnings. So spending crypto, that's treated like selling at FMV, and capital gains do apply. And a micro-transaction exception, so under $600, has been proposed, but is not law yet. Okay, let's talk about losses, scams, and worthless coins. Tax harvesting loss. Offset crypto gains dollar for dollar up to $3,000 against ordinary income, then carry forward. Wash sales rule, so currently applies to securities, not crypto. So the classic sell and rebuy strategy may still work for now. However, there are proposals to extend the wash sale to crypto. So worthless tokens under $0.01, no deduction unless you actually dispose of the asset. Okay, theft/fraud losses. This has always been a very tricky one. The March 2025 memo clarifies some investment motivated scam losses may be deductible under 165C2. And others are generally not, so others meaning romance scams, for example. Documentation and facts matter, so make sure to get professional advice. In terms of record keeping, this is what the IRS expects. So keep for 6+ years, keep dates, amounts, FMV in USD on acquisition and disposal, fees, counterparties, receipts, and a complete transfer trails across all wallets/exchanges. Keep in mind, the IRS can look back up to 6 years, and then Koinly obviously helps you centralize all this information. Okay, that's a lot of information, I know, but you can watch it several times to make sure you have a thorough understanding. If you did find this video helpful, consider dropping a like and subscribing for more crypto content, and I'll see you next time. Peace.